Under the Hood with Dimitri and Mustafa.
Well, I just think in outside of 2000, I mean, I just believe that,
Mm-hmm.
based on the indicators, based on Wall Street's earnings,
Mm-hmm.
based on, predominantly the inflation numbers, in order for us to get to a point where we're able to begin to see inflation reverse, to the extent that we're comfortable, I think that's where we're going to have to get,
Mm-hmm.
because we're not quite there yet at Fed funds rate of 4.5% and 7.75%. We're still seeing blowout earnings from consumer durable, companies. We're still seeing, labor markets that are very, um, very healthy, and we're still seeing a huge amount of spending.
Mm-hmm.
Where do we end up? I don't know. I'm just making a guess. That's really my estimate, is that we're going to be somewhere around 10% based on the timeline of Fed, additional Fed increases of the Fed funds rate, and approximately where I see us kind of turn it around, which I think will be towards the end of this year. But we're going to have to feel some pain in the
Do,
employment market,
do you
in the
think?
labor market.
So, do you think, as far as right now, we're at 4.58? Do you think we're going, as far as Fed fund rate, it's going to get to where it was in 2007, 6%?
You mean in 2000?
Yeah, 2000. I think it was 6.5. Right?
Yeah, I think we'll be at 6, and that's what Diamond is saying, right?
Okay.
Jamie Dimon, CEO of
But he's saying
J.P. Morgan Chase.
it's not. It's yeah. He's saying basically it's gonna get to that, but not. Yeah, go to that. Oh,
Huh?
U.S. interest rates could hit 6%. Oh,
Yeah, well, Diamond, here's what he says today. Says the Federal Reserve has lost a little bit of control of inflation. So that's why he's revising his number. He's revising his number for more than one reason, because he's already wrong. Okay.
mm-hmm.
We're at 5%. I mean, he already knows that. We're going to have a half point increase. We're going to blow through that 5% Fed funds rate. You already said we're at 458.
Mm-hmm.
So we'll be at 508, and he's wrong. So what
Could
is
you?
he going to do? He's the head of a big bank. He's going to try to recover himself, pull
Yeah,
himself up from his bootstraps, and throw another prediction out there.
yeah. Did you stop sharing your screen? It just
Yeah,
said
I
close.
stopped.
Okay,
Yeah,
okay, cool.
yeah,
Yeah, that was very interesting. I think we should do that more often. Go over those numbers and kind of do a side by side comparison. Because I am recording that for this show.
yeah. I mean, those. It's just interesting to look at the history, of whatever indicator you're looking at, to really hone in on how significant it is.
Yeah.
And with that 6,000% increase in rates in the Fed funds rate in 2022 last year, and when you look back all the way to 1955, and I think the next highest increase we saw in a calendar year was 233%.
Mm-hmm.
I mean, it's really a wake up call, right? To
Yeah.
how severe, the current state of our economy is in the eyes of the Fed, and the concern that they have in ratcheting rates up to the point where our business, we're in the business of banking, has pretty much come to a standstill
Mm-hmm.
because money has become so
Yeah.
expensive. I mean, you are seeing so what's happening in the investment community right now is you can lend $1 this year to someone, and if you require payment in 12 months, okay, you can demand a 10% rate. Where else are you going to obtain 10%
Mm-hmm.
return, or ROI, return on that money? You're not going to get that in the market, especially what we're seeing in the market this year. You're not going to get that buying a house, as housing price appreciation is slowing down. You're not going to get that appreciation in gold
Mm-hmm.
or metals. So what are people doing is they're keeping that money to themselves because they're realizing how valuable it is.
Yeah.
And if anything, banks want to lend out more money right now.
Well, what about
Everybody wants to lend money because the return is crazy. Like what's the 10-year treasury or the 10-year treasury uh bond right now, or note? Should be a note. What is it, like
I
5%?
think last time I checked it was like 4.5, 5,
Yeah, I
somewhere.
think it's gone to 5% now. So,
Yeah.
why not lend the government your money with a guarantee to get your money back and 5%? I
Yeah, when I
mean,
got when I got some, it was at 4.25. So
yeah. So,
yeah,
yeah, I mean, you're not going to get that in the market.
and
You're
it's
not going to get that buying a house this year.
yeah. What about
So,
people that are? I mean, kind of going back to our conversation that we had earlier, as far as going into some real life experiences and how we've been um, making decisions over the last 2, 3 years since COVID. Um, And one of the folks that I connected with, whose background is in credit as well, they pretty much study numbers. And what they just kept talking about how one of the decisions that they made was, they had a lot of excess cash. They pretty much went and bought. Uh, I don't know if it's gold coins, gold bricks. I don't think you can buy gold bricks, but they bought gold,
gold
and they
bars, yeah.
said they think that would be from their perspective, they don't feel very good about what's going on in the economy. They're a little scared about what's going to happen with the currency, so they invested in gold, which I thought was very interesting. I haven't done that. I'm pretty much, parked on the side waiting to see what happens, like an observer. But what are your thoughts on gold?
Yeah, I mean, the metals market typically and historically, metals have been a mechanism for investors to flee to when they're looking for safety, right? Because metals contain intrinsic
Mm-hmm.
value and tangible value that
Mm-hmm.
you can feel and touch and you can transfer, right? You can give someone gold and they can give you something in return.
Right.
So, typically what we have seen in the markets as of late is when the markets do well, metal prices have gone up. And right now what we're seeing is when the dollar is so strong, meaning you can get such a huge return for it, people are going to rotate out of metals and into the dollar as rates continue to go up. I mean, that's just how it works. That's
Sure.
the what do you call it? The opportunity is to take advantage of the stronger dollar and move out or rotate out of metals.
Yeah.
So the reason why I think a lot of people, and they don't realize this, get into metals now is number one for safety. But when the economy does turn, we are going to see those metals increase in price. There's no doubt about it.
Mm-hmm.
And just watch, if you haven't watched this before, when the market's up, in a given day, a couple hundred points, go out and look at the price of gold. The gold will also reflect an increase in price as well. When the market's doing crappy, what we have seen is the metals are also getting hit hard. Now, historically, when you go back, you don't see that as much. You see kind of a reverse. Okay.
Sure.
You see when the stocks are doing bad, people are moving into the metals market. But now the metals play a much more important role in our economy than they did 30, 40 years ago.
Right.
How many of our technologies today require gold, silver, nickel, these rare earth elements that 50 years ago, no, we didn't have the technology that required it. So if the economy is to turn around, the demand for those metals is going to increase. Okay.
Yeah.
Just like we've seen the demand for rare earth elements increase with the increase in electric vehicles, right,
Yep.
Mustafa? So we'll see the same thing because things like cell phones require silver, gold. Things like automobiles require gold. What is it? The platinum group of metals, which is
Yeah.
like rhodium, palladium,
Yeah.
platinum. So you start seeing it's become more of a demand-driven price when it comes to the metals, where before it was more of a fleet of safety when
Yeah.
the markets weren't doing well. So, when you'll see like today, market was up, gold was up significantly. The prior day when the market was down 600, gold and silver, they laid down, lost a lot of
Right.
value. So the safety is, and a lot of people do that, is because it's got value, right? Gold's always got value. You can hold a stock and it can go from $10 to zero. Some of us, we know about that, right? So we've seen that. We buy a stock at $5, it goes to zero.
Yeah.
And it goes bankrupt.
Yeah.
At least with gold, you buy the gold, you hold on to it forever, it still has value.